Hi, I'm Brandon Middleton, owner of USA Portfolio Real Estate and the founder of the New Wealth Collab. I've failed big time in real estate and more recently had some amazing successes with an incredible team. We're passionate about helping others avoid costly mistakes and share in huge victories because we know that real estate is a team sport. And that's why this channel and the New Wealth Collab exist. Hey guys, welcome to the show. Today we're interviewing Freddie Rappina from the New Wealth Collab right here in the podcast studio. We're going to be talking about building wealth. So I have Freddie here with me. He's a fully licensed financial advisor. And we're going to be talking about some of the questions that I've had as I've been, of course, approached and seeked out help with like a holistic wealth building approach to our finances. I mean, my family has used all different products, stocks, mutual funds, and frankly, I can't find anything that beats real estate. So I'm excited to have you here, answer some questions that I personally have, and I know that our audience has as well. So first of all, why don't you just tell me what's the difference between someone who has those licenses and someone who doesn't? What does that qualification do?
Well, the most important thing is I'm a fiduciary advisor, which means that I have to act in the best interest of the client at all times. I cannot act in my own best interest. I can't act in the best interest of the firm that I own. Everything has to be in the client's best interest. So that should be the first question you always ask. Anybody that says they're a financial professional of any kind, are you a fiduciary? Because if not, then they can work in their own or their company's best interest, especially down here in Florida. They're like, oh my goodness, there's a lot of people running around like
it's a very transient state.
Selling stuff out of their '09 Hondas and it's kind of weird down here.
So you have a responsibility to the client first.
That's correct.
All right, so that makes sense. And will you tell us a little bit about your firm?
Our firm is a little bit different than a lot of financial firms you're gonna run into because we really like focusing on wealth building, not just managing assets, though we do that as well. It's really about helping people get that next level of lifestyle that they want, not just saving a whole bunch of money because
savers are losers.
I believe that's a Robert Kiyosaki line there.
Sure is.
Well, yeah, it's a dance. It's one sets up the other. So, but obviously we're here at a real estate collab, and which is awesome, by the way. This place is great, and I'm so excited to be a part of this. But it doesn't always have to be real estate versus the market.
Right. But we're going to get to that.
We are, I'm sure.
Why is it that my financial professional has constantly pushed stocks, mutual funds? Obviously, you want to be diversified. I get that. But at my age, because I think you'll agree, there's no right or wrong answer with any of these tools, any of these products. It's a very personal decision.
That's correct.
And it took me a while to actually realize that because I'm very analytical, and everything was like, all right, just what's the right answer? What's the wrong answer? It's just got to be black and white. But it's all dependent on your life and lifestyle now and the lifestyle that you want. And me being very active and specifically very active in real estate, he sees the returns, which pretty much are infinite in my portfolio. And then tries to tell me about these 8 to 10% returns. And I'm like, I'm not really, you're not selling me, I don't think that makes the best sense for me right now, but yeah, I'd love to know how you help your clients decide, real estate or other products.
Right.
And really how to allocate.
Yeah, so let's unpack that first statement
Is
that
that a
you made.
big question?
Yeah, there's a lot going on there. We'll unpack it. All right, so we're coming out of one of the biggest bull run markets in U.S. history, right?
Mhm.
I think everybody can kind of agree we're at the tail end of that bull run. And I'm a retired police officer, so everything I think about, like you're analytical, I think in like terms of evidence. So I want to be shown
The evidence.
the evidence.
Yeah.
All right. So when people say that, the stock market is the only way to, get to wealth, I look at the past 10 years and I'm, who got wealthy?
Mm-hmm.
We're running that was one of the best times of the stock market ever. So it doesn't mean that like investing in the market is bad. Because there's a lot of wealth to be made there.
Mhm.
But in my opinion, it's more of a dance between the market and real estate, because the market is great. You have those rates of return, that generally will go up over time, and that's absolutely true.
Mm-hmm.
The problem, in my opinion, is people just don't live long enough for that
Yeah.
to make a whole lot of sense.
Yeah.
All right. So, you got the rule of 72. You have all these types of rules of thumb. And, the money's going to, if you're getting a 7% rate of return, your money should double every 10 years. Well, how many 10 years do you have?
Yeah.
So, and, there's this whole idea of investing in just retirement plans, and one day you'll have enough money to retire.
Mm-hmm.
And I think that just sounds terrible.
Yeah.
I want to become wealthy now. I want my clients to become wealthy now, and wealth will depend on, like, what does that mean, right?
Sure.
But I look at it as, okay, is your lifestyle increasing every single year? Right.
Okay.
So to me, you're becoming more wealthy. If you're able to do more, if you're able to go on more vacations, if you're able to quit that job you haven't been liking being at it for years. All right. That's when you're becoming more wealthy, in my opinion. But yeah, I don't discount the saving though.
Mm-hmm.
All right. So a lot of people say, well, save money in a bank. It's safe, has FDIC insurance.
Mm-hmm.
And that's true. All right. But how does a bank become wealthy? People
By
might,
lending
right.
and being you to death.
And people say like, well, buy a mutual fund as diversification and, all that kind of stuff. And that is also true. But how does the mutual fund company, which is technically called an investment company, how do they become wealthy?
Right.
You may have heard buy an insurance policy, has guaranteed growth, can't go down. And that's also true. But how does the insurance company become wealthy? So I'm not saying don't invest in the market, don't purchase these products or whatever financial tool is going to work for you.
Mm-hmm.
I want people to then afterwards do what these financial institutions are doing to become wealthy and generate income. So in my opinion, investments don't make you rich. Income makes you rich.
Right.
And
Just like Kiyosaki's, your passive income, your assets are more than your liabilities, then you technically are financially free.
Well, once you're able to afford your lifestyle and you don't have to worry about where the money's going to come from every month, then I would say, yeah, you have a lot more freedom, right? And that freedom doesn't mean like always you get to sit on your butt all day, right? It could be like, no, I always wanted to be a teacher, so I'm going to go be a teacher. I always wanted to work with kids at a daycare. I'm going to work money is not the driver anymore, right? Now what you want to do when your eyes are open during the day that's where I like say that's the freedom, right? And it doesn't have to be like, 100 million, 200 billion, whatever the crazy number.
It's actually a much smaller number than people think. I know it was for me when I first, I was always thought like, if I want to live this lifestyle, what's the cash price for all those things?
Right.
It's, like $10 million. So it's like, well, I can't get what I want until I have $10 million, which is obviously not true.
But when you're talking about the market and we're talking about real estate, what people need to understand is that the market is great, but it's the income it can create that's the problem. All right. So just a rule of thumb. This is just an example. Okay. So a rule of thumb: if you have $400,000 invested in the market, you can create about $1,000 a month in income with
On 400 grand.
on $400,000 and not have to worry about, or you can sleep well at night, not thinking that the well's not going to run dry, right? That at the end of the year, you're going to have roughly $400,000. And if it's allocated right, invested properly, you know, that's, you're going to have $1,000 of income. Yeah, you're laughing because you know what real estate can create. How much real estate does it take to create $1,000 a month in income?
So you're talking about leverage.
Yeah.
I
So
mean,
I'm talking about $100,000 property can create $1,000 a month in rent.
Yeah.
So what does that say about real estate? Well, in my opinion, it says it's it's 3 times better than, more powerful for the income than the market can be. All right.
And it's a real asset, not paper, that you can see it, feel it, touch it, insure it. I mean, I know you can insure, these other products, but
yeah, I mean, the insurance stuff comes in there too, but it's more about what kind of income can be created. And I feel like that's the part that a lot of people miss is, okay, what's the income that can be generated, right? So over time, you're going to invest in these retirement accounts, and I'm not here to begrudge any financial advisor out there, but it just makes me shiver when I hear an advisor say, "Don't worry, you're in it for the long haul." All right, that kind of drives me personally crazy.
It's tell me how much money you have extra every month, which whoever has extra money at the end of the month, and just give me that. That's basically what the pattern that I've heard is, what's your disposable income, and give me that much, and just pray.
Yeah, the whole pray thing. Yeah. So, but
because it's long term, and
right.
It's like, well, what if I bet wrong? I'm not going to know until it's too late.
Also, you want to be wealthy now,
right?
Because we're in our middle ages right now. We want to be wealthy now. We don't want to wait until we're 60, 70 years old to finally afford the lifestyle that we want. And now we're physically maybe unable to actually do the things we want to do. So those are the people we like working with, are people that want to improve the lifestyle. And I've tried to have a good analogies for some of this stuff, because no one likes to listen to a financial advisor just speak all about the financial mumbo jumbo stuff.
Yeah.
It's not my style. I like breaking it down, because I believe that if you can't explain it simply, you don't know it well enough.
Speaking of, I know we just had a huge event here. You're going to be speaking on your checkers versus chess. So maybe that's a tee up for what, to simplify this.
Yeah, the checkers versus chess analogy that we use when we're giving presentations is, checkers is what the traditional financial planning model, or I call it what's kind of forced on, especially the middle class, and that's the saving 30 years compound interest. At this point, you'll have this much money, you can take that much income, and you can finally retire. And I'm not saying there's anything wrong with checkers, right? I'm just saying it's not chess, all right? And chess is what the wealthy are doing, and being able to create lifestyle wealth, generational wealth, and it's not the same thing, right? So, and if people are getting upset that their lifestyle's not improving, you might be a checkers player, and you're getting mad at somebody else that's playing a totally different game, right? And the concepts are structured around that. But it's also scaled, right? So, we know of investment companies are buying up buildings, right? And you may not be able to buy a whole building, like a skyscraper or anything, but you might be able to afford a small property somewhere that you can collect rent on and have depreciation and all the good stuff that comes along with real estate. So it's all scale. Like I coach 12U baseball.
Mhm.
I don't coach in the major leagues.
Yeah.
Right. But I teach the same fundamentals that the major league players use. It's just a different scale, right? We don't have the same expectation on the 12-year-old kid versus the Tampa Bay Rays.
Right.
So it's really just understanding that and kind of challenging people's thought patterns, because you can't have an uncommon life doing common things.
Yeah.
When people say, "Oh, don't most people do this?" and I say, "Yeah."
That's the problem.
Do you want what most people have?
Yeah.
Or do you want to do something a little bit different?
Yeah, I think the trap for most people is that, yes, if I put $2,000 a month away times this compound interest in this amount of time, it'll be an impressive number, right? But that's only looking at it takes money to make money, that is so true in that traditional thinking.
Right.
But what's the biggest expense that we have? Taxes, right. So if our biggest expense is taxes, what are the tax benefits for these other products compared to real estate?
Right. So it's
how much you keep is really all that matters.
Yeah. You may have heard, buy low and sell high.
Yeah.
All right. That's the standard capital appreciation play. You buy a stock at one price and you sell it at another, you have a profit, right? I like to challenge that a little bit. I like to just buy and never sell.
Yeah.
Never sell.
I regret every house I sold.
Yeah. Well, even stocks, even mutual funds or whatever all paper assets that you're purchasing. When you sell, you create a taxable event.
Yep.
You're going to create capital gains. You're going to create,
which is traumatizing,
which is definitely not fun on April 15th, right?
Yeah.
But when you get to the point where you have the paper assets and then you don't sell them and you're able to take out small loans against that portfolio, like basically you have the collateral, right? You have the reserves. All right. So you have the reserves and you say, "Here, lender, look at all the money I have, all the paper assets," because they want that, right? They like that liquid assets. But I don't want to use my money. I want to use that money in the vault that you got there in the back. So I'll put a little bit on the table, so I have skin in the game, but I want that loan to be able to purchase this cash flowing asset, and which has the tax benefits that you're talking about. That's where the world opens up, and that's where a lot of people don't get to. In my opinion, not enough financial advisors are teaching people to get there, and
they're not taught it.
They're not taught it. No, a lot of them. I've been through a lot of programs, and I've had to do a lot of calculations, a lot of ratios. Jensen's Alpha, Sharp, Trainer, all these. Yeah.
Whoa, I'm gonna fall asleep.
Yeah, all right. Yeah, I get it. But you know what I never had to do? Net operating income.
Yeah.
I never had to do a cap rate on a real estate rental. I never had to do any of those calculations on any test.
Right.
Now, I'm not saying they're not out there. I'm just saying I haven't had to do any of them.
Right.
So yeah, I mean, I think the kind of the financial advising industry needs to have a good look at itself and saying, are we really helping people build wealth?
Yeah.
Or are we just managing money?
So if I hear you correctly, you can use your paper assets to leverage and borrow against to buy real estate assets, right?
Well, yeah, you're gonna have to use some of it, right? Because any lender is gonna want a down payment of some sort, right? For the real estate. So, but you're gonna
not
create
either or. You can leverage one
right
to get into the other.
That's where in my opinion, that's where the magic is. Okay, so you have to have a little bit of a down payment, but you're not gonna sell You're not gonna sell you $250,000 of your investment portfolio to buy a $250,000 property. That would be probably not the best thing to do, right? So now that you have the money, you're going to be able to then leverage by saying to a lender, I have this money, right? I want that loan. I'm going to use somebody else's money, and I'm going to use the great tax benefits of depreciation and 1031 exchange and everything else that we have
So
in real estate.
for those that don't understand, just in the simplest version, like what are those?
Okay.
Why is depreciation? This house that I bought for 100,000 is now worth 200,000. That's appreciation.
That's right.
Why do I get to write off depreciation on my taxes?
Okay, so depreciation is basically the government's way of giving you back some of your money.
Yeah.
All right, that's the easiest way to explain it.
Because the property is technically not as new,
Right.
right? So even if you've kept up on maintenance and everything, like they're saying you get to write it off a portion of it.
Right? So you can kind of get your capital back a little bit.
Yeah.
Depreciation on your car sucks. Depreciation on a house is great.
Right.
All right. So you're able to write off the passive loss on the real estate against the passive income, which is coming from the rent.
Right.
And sometimes two things can totally cancel out. And now, though it's not tax free, it feels tax free.
Right.
And the government wants you to do that. It wants you to, they want more people investing in real estate because, in my opinion, I believe it creates natural rent control, right? So us and all our real estate investing friends here at the New Wealth Collab, we compete when we have properties all over the Tampa area here, or
Right.
we have properties in different states, but we kind of compete against each other. So we have to have a market where the rent stays relatively low. Without those great tax benefits, then properties would probably be higher, or the government would have to have more control over it, right? More government rent control. So that's
There's a ton of benefits to owning real assets.
Of course, but in my opinion, people tend to want to skip the saving part, the fundamentals. They want to jump straight into the real estate, and which is an illiquid asset, right? So you hear a lot of financial professionals.
200,000. If you buy a $4 million house or building for $2 million, and you have $2 million in equity, you can borrow $1 million.
Right. Oh yeah. Besides cashing out already,
you could have liquidity. You can create liquidity.
You can get the money out, but it's not like you can just sell the asset in 3 days and have the money. Right. You're gonna have to do some stuff to be able to get the money. I'm talking about just having liquid assets. I'm not discounting that. I'm saying that's important as well, because I'm sure I know things have gone a little sideways in some of my real estate deals where you have to got to fork up a little bit of money, and you have to be able to get that somewhere, and you have to have the reserves.
Right.
And in my opinion, that's much safer than being you don't have any money, but you're going to invest in real estate. It's like, oof, that's going to be tough. It doesn't mean it can't be done.
I'll teach you checkers.
So you want to probably start with the checkers, and then we'll move over to chess.
Right.
Once you're ready and have a good foothold and ready to go. So that's
there's a way to play chess with real estate too, just the same. But this is good. I mean, having paper assets and being invested in the market and using that to buy real estate is the best of both worlds. It's
best
not
of both worlds.
Either or.
No,
it's very much an and.
It's an and, right? So having your paper assets, your portfolio, and then taking out the loans, taking out small loans, not huge loans. Want to be able to cover because it's not really debt at that point, in my opinion.
You're
it's
paying
more
yourself.
It's leverage at that point. You have the money to pay the lender back if you needed to. You just don't want to, right? You want to pay the lender back with somebody else's money, which is going to come from the rent.
Right.
So, and that's where the wealth comes in. And if you don't sell the assets and you just die, dying is kind of the best part because then your heirs get a step up in basis on the paper assets and the real estate. And if they sold it the day after, it's going to be likely based off of the fair market value of the decedent's date of death. So again, the taxes are, minimal or non-existent at all.
So what's like one question that someone should ask their, financial professional? So a lot of times
How many doors do you have?
What are you invested in, right?
Right. Like
if they don't own any real estate, you don't really need to ask them.
Well, if they're not wealthy, why would you want to?
They call them brokers because they're brokers.
Like if they're not, okay, if they're 25 years old, okay, give them a break, right?
Sure.
But if they're of age where they should have some pretty decent stuff and they just flat don't.
That seems like common sense.
I
feel like it needs to be said on the podcast because, look at their financial statement or look where, always follow smart money. Follow that's what I've done. It's just been around people smarter than me.
Right. And just practicing what you preach too. So I tell people when we're managing their millions in their accounts or whatever they have, we don't really have any minimums. We have a minimum mindset though. We want people that may be playing checkers right now, but want to get to chess, right? That want to increase that lifestyle, not just handing us their money and expecting some ridiculous rate of return over a short period of time. That if I could spin straw into gold, I would just do that all day. Right. I wouldn't even have a business. Right. So, we want to work with where people want to get to that next level. And what are we going to do with the fees that we charge our clients? Well, we're going to put it into an account, and then we're going to take out a loan with a lender, and we're going to buy a cash flowing asset that's going to create the income to support the firm or support my lifestyle, pay for my kids'
so you're not just doing
baseball.
That personally, it's the business. Is how you're set up as well. So the business has its retained earnings basically, and its wealth built the same way that you are personally, and the same way that you're recommending advising your clients.
And I feel like that's the big secret is that that's how good businesses are set up.
Right.
They are set up for that income because the business that are not set up well, they perish in a COVID.
Right.
Because they don't have 3 to 6 months of life within their assets because they don't have that passive income or some kind of recurring income, right? So we don't have to look very far here in Florida to see that, right? Especially with the real estate market down here,
right? And
who's investing, who are we competing with for deals, and it's usually a very large financial institution.
Wall Street, sure.
Exactly, right? So, I joke with people that, especially a couple summers ago, when there was a very big investment company that got kind of in hot water for outbidding first-time home buyers down here. And I joked, I'm like, it's, they got that money to outbid you on that first-time home. It's from the mutual fund that I sold them, last week or whatever.
Yeah.
So people should be thinking of it as their own small little company, which can turn into a large company. And
now, if they don't want to learn how to play checkers or chess, but they'd like to watch. They want to be passive. They want to know enough, to be dangerous, but not actually have to set all this up. You've got an event coming up, March 14th, here at the New Wealth Collab in Tampa. We're on the corner of 275 and Martin Luther King Jr. Who should come to that event?
Someone who is probably making a really good salary and is looking and saving a good bit of money and looking around going, I'm making all this money. I'm making X times more than I was making when I was 28 or 29. And why do I still feel like I can't do the things I want to do? Yeah. Well, why do I feel like I'm on this perpetual treadmill? And how do I get off this? How do I actually create wealth? And that's going to come from income. So we're going to go over some different strategies on that. You know, one strategy is not right for everybody, right? So, it's really just about understanding the options. But I feel like, you know, one of our goals as a firm is to kind of get out there and tell people like, hey, there are two different games. Which game are you playing? And there's nothing wrong with playing checkers. Now, if you're going to play checkers, be a darn good checkers player, right? Nothing sucks more than being a bad checkers player. You want to be diligently saving, as you know, take the advantages of all these good retirement plans out there. And just don't expect to ever have the kind of wealth that the chess players are able to achieve. And we all know that instinctively, which is what cracks me up. You know, if you go down to the boat show here in Tampa and you walk up to somebody and you say, hey, man, how did you afford this $25 million boat? This is awesome. He or she is not going to probably respond with, oh, I killed it in my IRA.
Right.
That's just not going to be the answer. You know, most likely. So, it's like, okay, what are those strategies, right? And and again, you may have to play some youth league, then go into the minors, and then eventually make the major leagues, right? But it's going to take some time. It's not going to happen probably overnight. But you know, the hardest thing to do is start.
With your example earlier, starting with, you really can make a big change in your wealth with real estate. I know because I've experienced it myself in just a few years, multiple times, and I've seen it happen over. I mean, it happens here all the time.
I don't know how you really do it any other way besides having some big business, right? Inventing some killer app or something. I don't.
Yeah, real estate is a great equalizer. Real estate mixed with these other tools and this strategy, chess or checkers, as chess. Yes.
Yeah.
Jeez Louise, is really the secret sauce. But it all comes down to, I tell people, real estate is always going to be local and relational. We're all in the people business. Even if you're not in real estate, you're in the people business. So people only do business with people they know, like, and trust. So these strategies could be great, but no one's getting out of their 9-to-5 job and then going on YouTube and trying to do the things that we're talking about. You need to have someone who's local, or it certainly makes it easier, someone that you can see, shake hands with, and who's personally invested, in your wealth building. And it sounds like that's the approach that you take with your clients, which is, it's harder. You can make a lot more money as a firm if you just churn and burn.
Yes.
But I like swan money, the sleep well at night money.
Yeah,
right?
I got
it. Does not do that.
I got into this to change some stuff, to make an impact, and being a police officer for 20 years, I've seen some stuff, right? And with this career, it's a little different. It's if you want to hear a funny story, so me and my wife went to Miami, and we went on one of those. It was cold in Miami, like legit cold, not like Florida cold. I was actually really cold, about maybe 50 degrees in Miami. We're going to the beach, and we went to went on a double-decker bus at Star Island. Went on all those homes,
super mansions.
Yeah, the super mansions, right? And we got to the backside of the island, and there was one house that just dwarfed all the other houses. It was huge, and we're like, whose house is this? And the tour guide said, well, you probably won't know his name if I said it, but notice the palm trees are really tall and stiff. This is the person who invented Viagra. So she thought she made the joke, right? And she got a little chuckle. But this guy, about 65 years old, stands up in the back of the bus and he screams extremely loud, "He deserves every bit of this house."
Wow.
And it was about 2013 or 12 or somewhere, right before I started the firm. And I was like, that's it. This guy in the back of the bus does not care how many millions this guy has now, because his name's Philip Frost, brought value to his life, right?
Yeah.
So that's what we're trying to do. We're trying to bring value to everybody's life, and the money just will come. It just falls out of the sky when you do that.
Yep, 100%. Add more or give more than what you expect in return. You really can't go wrong. And just one of my favorite Jim Rohn quotes is do what you have to as fast as you can, so you can do what you want to as long as you can.
Yeah.
So if you're in your prime active income years, like, don't play checkers when you know there's chess players in your community that are willing to help you, be a fiduciary and help you navigate this game.
Right.
Because it very much is a game.
It is a game, and be of service to those people, and your wealth will grow as well. That's why we're able to charge lower fees than your typical firm, because we have a market that we don't have to do a ton of advertising for, and technology as well. Like, technology is great. Like, what used to take me maybe 4 hours 5 years ago might take me 45 minutes now.
From your phone.
Yeah, exactly. From the beach or wherever.
Right.
So we try to give that savings kind of back to our clients.
Awesome. So again, if you want to get to know Freddie more, you have any specific questions, come ask him in person. March 14th. What time is the event again?
I think we're doing
6:30.
No, 6:30.
Evening.
All right. Evening.
March 14th, 6 o'clock. Come, network, ask your questions. And before you go, Freddie, I wanted to ask, why did you trust us with, joining as one of our charter members at the New Wealth Collab? Like,
I really like the concept. I think it's great. And these are obviously the people that we like to work with. People that we don't feel like we have to change people's mindsets in here.
Right.
We don't, we're, getting from checkers to chess. I feel like people in here are ready to go with the chess part of for the game. So, great opportunity. We get to do podcasts like this. We can, get to use the space when we want to. It's,
what kind of conversations have you had with members, and what have you've been to some of our meetings, someone that's maybe doesn't know anything about the market or real estate, what could they, what value could they get right away?
I think just the education is no one right way to skin a cat. Even, we don't say our way is the only way. There's other ways of, we love buy and hold strategies, right? But some people really might like wholesaling. Some people really might fix and flip. Some and are successful at that. It's just different strategies. Learn them all, and I think everybody has an opportunity here to learn all those different types of strategies, to kind of decide which one is going to fit them.
Right. Because they're learning by doing, or they're learning by watching a fellow member do it, seeing how it turned out. It's very different than sitting in a lecture, or some, free dinner to hear about all these strategies and possibilities, versus having a place where you're working your business anyway, and you're around people that are doing it
right, and
constantly.
You have questions. People have, there's always somebody that we're here with, and that likely knows the answer, right?
Right.
And like I said, it can be, it's collaborative, and
it's in the name.
Yeah. So it's in the name. People have been trying to get me to do short-term rentals. I don't do short-term rentals. I haven't yet. Doesn't mean I'm never gonna have short-term rentals. But some people do really well with that, and that's great. It's, but I don't have questions on short-term rentals. I know people who I can ask real fast and have a pretty quick answer on.
Awesome. Well, Freddie, I think that was all of my questions. I think you've given a lot of value to our viewers. And again, March 14th, come on down, get to meet Freddie, myself, the rest of the team, and welcome to Cola, man. I'm glad you're here.
Thank you. Thanks for having me.